So when we do technical analysis, where if we start putting a lot of indicators on our charts, it becomes more confusing than helpful.
I agree.
This is why I like to focus just on price action. And usually the way I start is I look at the monthly. I look at the monthly and say, hey, what is the monthly telling me? So the monthly right now in the SPY is in an uptrend. And the other thing I want to tell you is just learn one. Just learn how the SPY works. And don't try to get too fancy. Hey, let me find this one. Let me find that one. Just learn one. And then as you start to hone in on your skills and get better, you can move to the next one.
Understand.
Okay, so monthly is telling us, okay, everything is in an uptrend. And then next I go to the weekly. The reason why I go from monthly to weekly is to see if there is any possibility of a pullback that the weekly is giving us. And right now, when you look at this chart, and I have drawn the monthly trend lines, so whenever it's coming to the top of the trend line, it says, hey, I might go down. We wait for confirmation. We don't necessarily, it touches I'm down. No, that's not what we do. It just says, hey, it's a warning sign.
Okay, got it.
When it touches the bottom, it says I might go back up. Again, we don't go in right when it touches, we wait for confirmation.
So when you say wait for confirmation, how do you know if you get your confirmation? Because I'm aware of like consolidating. If it consolidates around a certain level, so many times it has the potential to either go up or down.
Yeah, so we'll go into that. So right now is just top-down analysis.
Yeah.
And when we get to the bottom of the analysis, this is when we get the confirmation. So once we know, okay, monthly is up, weekly is up, it might have a pullback, then we go to the daily. And what we want to look at the daily is how is that in relation to the monthly and weekly. And you see here we have a pullback, right? We have a pullback and we touch the bottom. And now there are two ways to start trading at this point. You can say, I'm just going to look at the daily. I'm not going to go to a lower time frame because the lower time frame takes too much of my time. That's fine. So you can trade the daily. What you want to see is break of structure. So this is where the confirmation comes in. Monthly is up, weekly is up, daily gave you a pullback, meaning it gave you an entry opportunity. So when price touches the area of value, which is that trend line, then you say, okay, it touches, now I'm waiting for break of structure. What does break of structure on the hourly, not on the monthly or the weekly, but on the daily in this example, but we'll look at the hourly as well. So what does break of structure mean? Price went down, it made a low. Now I want it to push up, make a high, and then make a higher low. When it makes a higher low and you break the high, that's your confirmation that you broke structure.
Okay.
So I know you're writing down notes, so let's go over that and on the screen.
Okay.
So price went down, made a low. Price makes a high. It doesn't break the recent high, but it makes a high. It comes back down, makes a higher low. It does not go below this low. This tells you, okay, get ready. We're about to break structure. And when you break this recent high, that's when you break structure. So until price is in this area here, and on a close basis, not wick, you wait for the bar to close. Until price has closed here, we have not broken structure yet.
Because it has to take out that second candle to the left.
It has to take out this high here.
Yes.
Once it takes out this high, you have broken structure. This is where you can get frustrated, because now if you want to be an aggressive trader, you can say, I have this low here, I have made a higher low. As soon as this bar closes, I'm going to enter here. You can say this. This is an aggressive entry. When you do this, just know that this is your stop, and price could immediately go do this. If you know this, it's okay. The important thing is, every time you see a signal, you take it. If you're afraid and say, well, this might work, this might not work, we don't know.
You don't know.
When I enter a position, I have no way of knowing where price goes. I just say, this is what the chart is telling me, I'm going to enter. If the market makers decide to take it the other way, then so be it. But I have to take every trade so that I can win consistently.
That makes sense.
So you can be aggressive and enter here, or you can wait for confirmation and enter here.
Because if it makes that new high and take out that candle, it's assumed that it's going to keep going up.
Yes, it is, because the structure is broken already. The daily structure, right? The monthly is intact, the weekly is intact, the daily has a pullback and it has broken that structure.
Gotcha.
And then to make it even better, the way I like to do it is, the daily is just too much of a movement, because the price has to move significantly for my stop. So if I enter here, my stop is about $6-7. That's a wide stop, especially if I'm entering a option position. That's almost going to wipe out the whole option contract if it goes against me. This is why I don't like to trade on the daily. I then go to an hourly chart. And now you can trade hourly for swing, and then even go to a 15 minutes if you just want to be in and out the same day. So on an hourly, how can you tell that structure is broken? Same concept, right? Same concept.
Yeah, same concept. So basically, which set of candles are we looking at to tell if the structure is broken? Okay.
So price had a pullback.
Okay.
It made a low, right?
That.
So when it touches this area of value that you have drawn on your monthly chart, you say, okay, I'm going to get ready for an entry. Price makes a high. Price reverses, makes a higher low, and then price takes out this high.
So wait, let me ask you a question.
Yes.
Which bar took out the high? Is it that small little candle that popped up, took out the...
Okay. So the way I want you to look at that, it's a very good question. Let's just zoom. And then take out this drawing.
Are you using Pro?
Yeah.
The Pro?
Yeah,
Okay.
I'm using Pro because I want more than one chart. I want multiple indicators.
Yeah.
So
How much is the Pro?
I got it at a good deal. They had a 60% discount, so I'm paying like $180 a year.
Got it.
Yeah, but it's usually a lot more than that.
Okay.
So price came down, right? It touched here. It made a high, and made a higher low. So what we want to do is take out this high. This is the high we want to take out.
Oh, gotcha.
Right? Because the highest point, that's the one we take out. And the highest point was taken out on a closed basis when you have this bar here opening much higher than it. So this is where you would enter a position.
Gotcha.
Now,
so do you wait till the candle completely form, or are you taking the trade as it's forming?
That's a very good question. If the taking out was starting down here, right? If this was how it was taking it out, I would wait for the candle to close first.
Got it.
But if it opens up here, I'm just saying, hey, this is now break of structure already. I'm just going to go up.
That's a good strategy, actually, to go through your charts and start looking for break of structure.
Yeah.
And noting, okay.
Now, you say support resistance, right? We'll talk about support and resistance in multiple ways. One of the things I want you to focus on when you think about support and resistance, it's an area of manipulation. What does the area of manipulation mean? And I'll give you a good example here on this chart right here. If you look at this chart today, I drew this area of support resistance because it was right before it gapped down. This was an area, and it came to it, never made it through. It came down. So when price comes here, that's the resistance, right? Because you have multiple touches. And what manipulation means is the institutions, they know people are going to come here and say, hey, as soon as price breaks here, I'm going to enter. I'm going to be a breakout trader. Guess what? You are trapped, because if you're a breakout trader at this bar, as soon as it passed it, they immediately reverse the price on you. So they stop you out, right? You got manipulated out. The breakout trader got manipulated out. The next person that could potentially get manipulated out and just watch this, take a note of this and watch this, is as soon as this got rejected and anybody who enters a short position here, they're going to take the price up here and stop them out, because these people, their stops are going to be here. So both sides will be manipulated out most of the time. So for me, when I enter at an area of value like this, I don't just enter as a breakout, oh, I'm a breakout trader, I'm entering, or it got rejected, I'm entering. I'm doing neither right now. Why? What I want to see is, if this was a true breakout, price will come and test it. This is what we mean by test. It tests it, but it never closes below. That's a sign of test. It's that support resistance gets tested, meaning it doesn't close above or below depending on which direction you're coming from. So if this was a true breakout, you wait for a pullback to test that area. As soon as you break the high of that value before it pulled back, that's your entry. That's your confirmation that this was now manipulation is taken care of. And on the reverse side, the longs got manipulated. For me to say the shorts are done being manipulated, I want to see price come down, test it as resistance, don't close above it, and come back down, just like you see in this drawing here.
So just to reiterate what you just talked about when testing the area. So for example, if the high was 417, whatever that last candle was, because it rejected the price from going any higher.
Yeah.
The next candle, to know that it's a test, it will not close. Let's say we're trying to go up.
Yeah.
It won't close. It won't close below the previous candle if we're looking in the direction of going up.
No, so don't look at it as which part of the candle we're closing. If you look at your support resistance lines that you drew, and by the way, support and resistance is not a line, it's just an area.
Yeah.
So you just draw a line, but somewhere in that vicinity. So what you want is price not to close below this line. Not
below that area of value.
Below that area of value. Nothing to do with the candle, but don't close below this area of value. Now, this area of value, one way to look at it, because we say area of value is a zone, not a line, you can draw it in this manner. You can draw it like this. If you draw it like this as a rectangle, then you can say, hey, I don't want to close below this rectangle instead of below the line.
I understand. Below that area of value. So
yeah.
The area of value is 418. You don't want the candle to close below 418.
Yes, either the 418 or this red rectangle, depending on how you draw your support resistance.
Yeah.
Right? So
it both represent the same thing, right?
Yeah. So same thing, right? Same thing on the downside. You want the downside to say, hey, I'm going to go down. I'm going to test this area. I don't close above that area. And then I'll show you this continuation so I can enter here comfortably.
Right.
Right? So this is why when you draw support resistance, just be mindful of a possible manipulation.
Got it.
The only way manipulation is over is once they have done what they need to do, price tests it and never closes above or below depending on which side you're going.
Okay.
Okay, so now that we have this into the picture, if you, like I said, you could have entered a position here to go long and then price reversed on you, but it gave you from 413.25 to 417, so it gave you a good $3-4 move to capture some gains, right? And what you need to do is initially maybe just do one contract. One contract, and if it moves $1.50, you close the contract and you're happy because you're practicing the art of finding your trades.
That is true.
Yeah, and then as you get better and better, you go to two contracts and you close one at $1.50, you move your stop higher and you let the second one run. And then if the second one goes to $3, you close it. And then when you go to four contracts, you start, to stair step your way out.
That makes sense. I have a question in regards to that. Like when we're talking about doing the one contract, once I get actually good with spotting trades and breaking structures and things like that. My question becomes, how do you calculate? Because potentially calculate, okay, if this contract moves, let's say $1, I'm looking to make X or Y, Z dollars. Like, how do we? I know I've been told about you only need a 50-cent move because you're splitting the delta in half or something like that.
Yeah. So when you buy an option, you look at the delta of that option, and usually, especially when you're new, it is best to buy delta 50 or better.
Got it.
When you get a delta 20, it means the probability of you making money is only 20%.
Yeah.
So you don't want delta 20, you want delta 50 or better. They're more pricey, but they're more probable of you making money.
That makes sense.
So the way you calculate how much will I make on this move is you look at the delta. Delta 50 says, if the stock moves $1 in my favor, the option makes 50 cents.
Yeah.
That's what delta 50 means.
Right.
Yes, right? That means $50. It's actually $50, right? 50 cents per share because you're controlling 100 shares. For every dollar move, the option gains by the delta amount. So if you get delta 70 for $1 move, delta 70 means 70 cents.
Yeah. Okay.
So that's how you calculate. So you can say before you even enter your position, you can say, okay, this position is going to cost me $1.50 to enter. I want $1.50 move at a delta 50, then I'm going to get out at 225 because you've already calculated your price.
Okay.
right? Is that starting to
Yes.
make sense?
Yes, no, that totally makes sense. I've heard it before, but now it's like, okay, I definitely got it.
Yeah,
Yeah, I totally got it.
yeah, very good. So now going back to our SPY example here, we made a low, we broke structure, and then we decided we're going to come back and retest this low, right? This is why you get out quickly, capture your gains, and you wait for this high to be broken for a new entry, because now when price comes back down, what is the next opportunity? This is an area of value. Now I'm going to wait to see if I break structure.
But you got to break structure all the way back up from when you originally got in, right? Or else
No,
you're running.
so this one you got in, you got out, you made money. Now you have a new pullback.
Correct.
Now this is a brand new setup, right? You have this pullback, and you need to break the structure.
Right.
The way you break the structure is you need to make a high somewhere. So we haven't made the high yet. So we're making a high. You need to make a higher low to resume. This is when you know you've broken structure. So right now we have not broken structure yet.
Makes sense. Yeah, that's exactly what I was saying when I seen that.
Yeah.
I was saying without that you need to take out that where you got out the first contract at, you need to make a break of structure by making a newer high, right? But then you were saying once you make the newer high, you need to make a newer low to test that high that was breaking that previous structure to enter. Is that what we're saying?
Yeah.
Got it.
Now sometimes these pages just don't make sense the way they're set up, because if price had done this, and if it had done this here like this, then you could have broken structure here. You didn't have to wait for this here, because it had given you a higher low on the way.
Higher low.
Yeah, but today it never gave us that higher low, right? Just price just kept driving up. We don't have that point of reference.
Got it.
What that higher low helps you with is it gives you an opportunity to put a stop right here. Otherwise, now if you enter anywhere here, your stop is down here.
Right.
That's a long distance. Like that wipes out, $10 wipes out your contract value. Right? So that's what you want to look at. Now, the other question you asked is, how far back do I look for when I draw my support resistance?
That is true.
In an hourly chart, I don't look a lot further if I start to see a couple of points touching. I don't need to go all the way out here or out here, because I already have a point of reference. What you want is, what is the nearest point of reference? If I enter a position, just as an example, if I enter a position right here, what is my next possible area of target, right? This is that nearest support resistance that you draw is your next target. I don't care about this one here, because I have not even cleared this yet. That's why if you look at the closest to the upside and closest to the downside, this is the box that I'm working in. Once I get out of this box, then I want to draw a new box. Then if the new box requires me to go back 2-3 months, great. Otherwise, I'm just looking at my current box, because my price is contained in that box. What's my target up? What's my target down?
Okay, because what I was trying to do was with the practice trading on demand. I think on demand is better because it actually gives you the feel as if you're trading in the market real time.
Yeah.
What I was trying to do is identify areas of value, and I know that I was taught the more touches that it have at that area, that's considered an area of value, whether it be resistance or support. Being resistance at the top, support at the bottom, but I know that that's an area of manipulation. So now if I'm just looking at breakup structure, I'll start out by identifying the trend, then moving down to I guess the weekly to see whether direction it's going in after I've understood the direction of the market.
Yeah.
Next thing is to come down to the hour. Now the hourly is used for swing trades, which are typically a little longer.
Yeah, it means you hold the position overnight.
Okay, got you.
Yeah.
I'm gonna note that down.
Now, if you want to get out of the position same day, I will show you on the 15 minutes chart the way I look at it. But let's just finish this first.
Yes.
And as you're drawing your support resistance, if you want, you on the daily, you can go to your daily and say, hey, this is what I'm going to draw on the daily, right? The daily already shows me here's an area of value, here's an area of value, in addition to the trend lines, right? You draw your monthly, your weekly trend lines, but in addition to the trend lines, the daily will give you these areas where price could reverse. And when you draw those trend lines, just a few around the price you're at. You don't need to go all the way down here. You don't need to go all the way up here. Where's price? Where am I in relation to the nearest support resistance? And just draw those lines. And when you come now from here to the hourly, then those lines will be visible to you, right? Those lines will be visible and say, oh, okay, here's an area of value, price touches it, reverses twice, and then it breaks through, and then it continues to break through, right?
I'm just trying to really get a feel for my strategy on how to plot with this wonderful train. So like you were saying, the area value, because it transferred over down to your hourly chart, and you're seeing that, okay, price touches and then it breaks through. So keep it in mind with the area of value, break of structure, we're seeing it's still the same. It's still the same thing applies, right?
Still the same thing applies. But when you're coming, for example, on this day, when we entered here and it made a good move, where could it potentially reverse? This area of resistance. So you don't stay in this trade when 2 bars, in 2 hours, it fails to even touch it. You're already exiting your position at the low of this bar because it says, hey, I'm struggling to go through here.
Okay.
Right? When it does not struggle, like if you look at it here, it breaks, it comes down, it breaks again, comes down, breaks again, comes down, and then breaks through.
So isn't that like considered consolidating that little area you just talked about?
Yeah, it is. Absolutely. It's absolutely consolidating. And when it is consolidating, is you want the high to be broken, and this gave you a solid break. It wasn't just a wick, I'm going to go through it. It's an open completely outside of that consolidation.
Yeah, so that's the thing. So what is a signal that, okay, if I'm consolidating around an area, it's a possibility that I can go either direction, because it can go either direction. What's a possible sign that shows you that this is going to push through or this is going to reverse on me? Is it the more times that it tests an area that it becomes weaker?
So that's a solid question, and I have IWM as an example. So IWM is in a consolidation. It's in a very big consolidation. And how do I know when I get out of this consolidation? So I either want to break this high, come back, test, don't close below this, and reverse, or break this low, test it, and reverse. This is how you know you are done with that consolidation. If you don't wait, right? If you are in a hurry and say, hey, I made a new high, I tested it, but I don't break structure. And right, break structure means you don't make a high here, and if you enter somewhere here, you're already losing. You want to make sure that you get a good break of structure and you don't close below this line. This is why this is a good example. It went up, closed below it, made a new lower high, close below it, lower high, close below it, lower high, just kept going down. So the way you know a consolidation is over is it breaks structure in the direction you want to go. It does not close below that area of value. It stays above it. As long as it closes below on the long side or above on the short side, then it's invalid.
Yes.
So you want to make sure that you have a strong indication that this trend is about to start or it's over. That's why area of...
I'm sorry.
No, go ahead.
And the way that it indicates it's over is because it's breaking the structure.
It's breaking structure. Absolutely. Like in this case of SPYs, you can look at this as consolidation area. Like if you look at this hourly, it's consolidation area. So are we going to break out of this liquidity, test it, and resume? If we don't do this, then this could come back down here. We have this big gap here that we left open a while ago. So it wants to close this gap.
What price level is that? 402?
Yeah, 402, between 400 and 403. Yeah, it wants to close that gap.
Didn't it get down there? Or it hasn't? The
No,
I think it did.
not yet.
I think it touched 405.
Yeah. So it hasn't gone down there yet.
So here's the thing. I just want to really quick with that, like closing gaps. So TGT, for example, that's Target. They had a gap from 195 up to like 200. It has yet to close that gap. They went from 195 all the way up to 200 and kept excelling.
Yeah, sometimes those things happen. Gaps is not a requirement that they close, but know one thing: at some point they're gonna come and close it. At some point they're gonna come and close it. Why? Because institutions, they will sell before they buy, and those positions that they have sold, they're losing money on them because they don't close them. They have deep pockets, so they can just let it ride for years, and they'll come back and collect later. So, because what they will do is, if they want to go long, they will sell, let's say, $10 million on the sell side, and then once the price goes down for them, it gives them a buying opportunity, they'll buy 20 million. So the ones that they have bought is making them more money than they're losing on the downside. And then once price goes to a certain point and they make their money and they exit, they'll start driving the price back down. And the loss on this is going to start to get smaller. When they close the gap, they make money on this. So they've made on the 30 million and not just 10 or 20. That's how the institutions play.
Yeah.
So that's how you want to take a look at it. But it is not necessary, and we don't trade in prediction. We just trade what the chart says. When the chart says I've broken structure, I enter. And if price is broken structure to the downside, then I will target this gap because it's shown me I'm going to go down. But I'm not going to enter a position up here just because there's a gap.
Yeah, understandable.
Yeah, you want to see a clear break of structure.
Got it.
So monthly, weekly, daily, and the hourly to pinpoint your entry for swing trades.
For swing trades, got
Yes,
it.
yeah. If you want to trade same day in and out, if you want to do day trading, then there are a couple of things that are extremely important for me, what I look at. And I have indicators on my chart to tell me what those are continuously. So every day when the market opens, I look at the 15-minute range. And go ahead.
I was just going to say, that's what I've been practicing on, because that's what I was told to start practicing on the 15 minutes. So I've watched trying to get my setup from the daily and then going down to the 15 minutes.
Yeah.
Because I was told that's where you want to trade.
Yeah, but here's where I stay out of trades because of the way I set up the charts. So on the 15 minutes, the first 15 minutes, I have a high of that 15 minutes, a low, and a mid range. I draw that every day. I just have a script that draws it for me. I draw that every day. And then the other important thing is, what was the high, the close, and the low of the day before? What was the high, the close, and the low of the week before? All of these values are important. Why are they important? You can see it clearly in the SPY today. And I want to encourage you every morning to listen to my YouTube channel, because every morning I talk about setup and possible areas where price stops.
Got it.
And what I said today is, hey, this low here is a headwind. This low from last week Monday is a headwind. The 15-minute range of last week Monday is my next headwind. So if I clear this low, by clear I mean all the manipulation here is done. They trap longs, they trap shorts, and then they take it here and don't close below it. If they give me this, my target is from 418, 419 area to 422. So I want to see this cleared, because how do I know this? My first sign of trouble was this area of liquidity, which like clockwork, they came and manipulated both. If you were long, you got trapped because they immediately reversed price on you, right? You say, oh, I broke out of this, or I broke out of the 15-minute range. No, this was a headwind. So for me, I haven't not entered a long position here because I have headwind. And then to the downside, you have yesterday's high, yesterday's close acting as support to the downside. So today, price is not really doing much, right? It's very difficult to trade when price is not doing much. So you skip those trades.
Because I've sat and watched it, and I'm like, well, I didn't see it move much at all. I didn't see any entries at all. And
Yeah.
I've sat and watched. I used the Fibonacci retracement because that's something that I trained on.
Yeah.
So I didn't see, like, just using it on a 15-minute alone, just did not ever see a trade, or if anything, their price will invalidate the trend, but then it would never give you a solid entry to get in. So it was like,
yeah. So here's a fib retracement, right? From recent low to today's high. We want to see break of structure, meaning we come here to this 23% or to the 38% or to the 50% and break structure, and we have a re-entry, right? That will be a solid position. So we're not seeing that yet. So there's really no entry today. And if you want to look at the downside, this is where it becomes dangerous and people don't take advantage of this, is when, so I'll make it, so when price is at the 15-minute low, when you have the next headwind as the high of yesterday, which is a few cents away, don't enter a position because there's no clear indication. The next one is at the close of yesterday, which is 415.34, which is about $1 away. Now this you can enter because at Delta 50, you can make $50 per contract. But we have not seen any sign of entry yet because we're still dancing around the high of yesterday. This is the area where they're manipulating. So until they're done manipulating, meaning they do this and don't close above it and come down here, there's no entry. And whenever you look at the 15-minute chart, look at all of these areas of, is there enough distance between my entry and the next area of trouble, the next area of trouble, the next area of trouble, this trend line? If there's not enough distance, you skip the trade. That's really critical. And even to the upside, the area of trouble is this line. The next one is a couple of weeks ago, Friday, is the 419.10 area. So would there be room once I get a confirmation? Would there be at least a dollar move to my target? If the answer is no, you don't enter, you just skip it. That's why people get frustrated and get into positions without looking at the left. Look left. This is where price is going to stall. Qs, yesterday I entered some positions in Qs because yesterday was just a beautiful day in the Qs. And I'll tell you, Qs made a 15-minute range high, right? Where does that high coincide with? The high of Tuesday. And then the high of last week Friday was nearby. So when price penetrates, fails to make a high of Friday, but then doesn't really come back down, it just wants to continue up, then you enter that position. And you enter it and you target the next area of trouble, which was in this area. And where did price go? It went right there. Price just kept driving up because there was nothing preventing you to the left from this area. There was nothing preventing you until you got maybe here a little bit, and maybe you got to this low 15-minute range of last week Monday. So as you look left, this 15-minute range, so remember the 5 things: the high, the close, the low of the previous day, the 15-minute range of the previous week and a half to 2 weeks. If you look at this,
how do you see that on one chart?
Like I am right here. So this red, white, green lines are the 15-minute ranges of every day.
Of every day.
Yeah, so when price is here, I just look left and say, hey, where's my area where price could stall? Right, this high here, this 15-minute range low here, price stalled, but it didn't stall, it just kept pushing up. The closer it is, like if it's this week, it is stronger. If it's last week, we're bound to go through it, so you pay more attention for that. And then you plot out the high, the low, and the close of yesterday. Each day you can just plot it out. And if you ever change to pro version, I can share with you all these scripts and they'll plot it out for you.
Okay.
So what's important? Look to the left. Don't have to look too far back. Look where price could potentially stall. And, like we talked about SPY today, in Qs, where could price stall? It stalled at yesterday's close. It got manipulated at yesterday's high. And now it is pushing down. It just keeps pushing down. Maybe it wants to test the high of yesterday's 15-minute range. Maybe 326.53 is where it wants to test. Now, because I did not take a position, but this was a possible area to enter right here. Because, so, no, in the Qs, yeah, to the downside. Yeah, to the downside. Right, because everything is going down to the downside, and my first target would be 326.60. So I have about $1 move if I want to enter this position. But we had a strong move yesterday. We have a strong move the day before. I am feeling like it's just taking a short breather before coming back Monday to resume that uptrend. So I'm really not in a hurry to enter any position today. I want to see some very, very clear indication. Clear indication meaning, we come back and test this close of yesterday or the high of yesterday, get rejected there. And then maybe I can target 1, target 2, target 3. I can look at it in this regard. Otherwise, today is just one of those days where just enjoy the gains from the last couple of days and just not trade. Not trading is a strategy.
Yeah.
Yeah.
Makes sense.
Yeah. All right. So I know I've talked a lot. So, what other questions do you have?
I think it's really just being able to honestly being able to like keep in mind a structure or a plan for when you're coming into trade. So I do a lot on I try to trade on TOS. So my I guess my focus should be trying to mark up charts and and do like what if analysis. Like if I would have took it here, let's see if it would have proved me right, or actually just take the trades on demand anyway, and see if it proves me to be right. But guess just getting a strategy to follow. And I know not the strategy may not work in all the time, but getting something concrete and solid to work with. I understand you said like on an hourly chart pretty much swing trades. You hold those overnight, but identifying those breaker structure. I did do read a book on price action, so I do have some understanding of price action, understanding the market structure, finding areas of values, knowing your entries and exits. So just pretty much brushing up on those skills. I think my challenge now is execution still, because like I could talk about it all day, but it's like when it's time to execute. Um, Sometimes I struggle. But then there's other things like you talked about, like being able to retest and proving that that retest has completed its retest and is ready to either go one way or the other.
Yeah.
That's going to be a challenge for me a little bit. But I guess I'm honestly just practicing because, like you said, the retesting is that it doesn't close below or above an area of value.
Yeah.
And that's your retest. Along with breaking the structure, creating a new high. I've watched from the crypto side, watched Bitcoin. I'm not Bitcoin, but Dogecoin really a lot, and have began to see some of these things like the longer it consolidates and make either higher lows or lower highs, and depending on the direction, and 9 times out of 10 breaks down the longer it's there. So I've been able to recognize that. It just seems like the stock market is really different. And then about getting in, knowing how fast to get into a position, not missing your target, is the other thing. So
Yeah.
it's kind of challenging.
Take a look at it here. Here we have a high. And then just a few short hours later, we have a lower high. And as soon as you break this area, that's your entry short.
That's true because you're breaking to the downside.
Yeah, and you broke structure. You have lower high and you broke structure. You take to the downside. This was a good payday. And even if you had held to that position at the open, it was a fantastic payday. Of course, I don't hold this 15-minute trades. I don't hold overnight. I'm in and out. So I saw this and I took advantage of this. It was a good payday for me, and then I went out. So the thing that I want to tell you to do is just trade on demand. It doesn't matter how many contracts you do because it's on demand, right? It's paper money. Every single trade, journal it.
Right.
Why did you enter the trade? Take a snapshot of the screen and put the screen in your journal. I saw this structure. This is why I entered it. Do that 20 times in a row. Every signal, don't guess yourself. If it gives you a signal that you believe is up or down, take it. After 20 trades, let's come back and go through your 20 trades.
Okay, perfect.
You'll go through each chart with me, and then we will say, hey, here's where you could have done better, or here's what you're doing really good, and do this more.
Okay, perfect.
Yeah, so 20 trades will take you about 20 trading trades that about 2.5 weeks or so. So do those 20 trades, hit me up, we'll set up another call, and then we'll go through your journal. But you have to journal. Even to this day, I journal my trades. And like, here's why I entered, here's how the charts look like. And if I'm wrong, I look at the chart and say, was there something that I did wrong? Sometimes what I will do is I'll enter a position prematurely because I get excited, trigger happy, and then when I look left and I say, hey, there's headwind, price stopped then and reversed on me, I got stopped out. And I know I got stopped out because I was just a little too trigger happy.
Okay, got it.
So
I'm definitely gonna be, like I said, working on demand more, and then definitely considering price action, because I'm doing that. I think I'm getting to a point where I'm kind of getting burned out, but I know I can't let that happen. So I'm just trying to regroup, not chasing after everything somebody calls out, just really focusing at this point until I find my edge in the market and what works for me.
yeah.
So I went back. I'll continue to do continuing education with the YouTubes as I've been doing. And I have been trying. I have started watching your channels. But to continue to follow one specific guide. The other thing is, so we'll work on that first. Working on finding the edge, then we'll learn about the because I don't really know how to use the watch list, but I think I need to focus on right now is identifying, like you said, break of structure, understanding when a price is going to test another level before you go in whatever direction it may go in, identifying that.
Yeah.
And that's what I want to try to focus on, marking up charts, because sometimes I don't mark up the charts, but I do look at the price action solely, and I've been only practicing on the 15-minute time frame. But I'll try to go back over these notes. Basically, I'll, of course, identify the structure and just marking up the charts, and then going from there, trying to enter the trades. And I did want to try to do it on the 15-minute trade, just because it's on-demand trading.
Yeah, just focus on the hourly for now. As you're training, it's a lot easier. Just focus on the 15 minutes is too fast of an action. So focus on the hourly, focus on swing trades. The day trade will come. I promise you it will come.
I understand.
So
let me ask you this question, because I guess my whole mindset and everything was focused on doing it on the 15. With the hourly, it takes 1 hour to form each candle.
Yeah.
Now, I do speed up the time frame or whatever, because just sitting in front of the computer for a whole hour, I mean, it's not. So I will say this, I do speed up the time frame on TOS, just so I can see like what will happen. But I'm just trying to figure out, how do I effectively use the on-demand trading as if I was trading in the actual market.
Okay. Here's my suggestion.
Mm-hmm.
And first, remember I said only focus on SPY. Just do SPY. Don't do anything else. Only SPY. Every day, that's all you do is SPY. And look at your monthly structure, weekly structure, daily structure at the beginning or at the end of each day. Just look at that. And then your hourly, what I recommend is do this as if it was live trading. Mm-hmm. And so don't fast forward it. Just pick a date like 3 weeks back, and every hour for just 2 minutes, look at that chart, do your other business, come back after an hour. If it gives you an entry, you enter it at that moment.
Got it.
And when you treat it as if it's live, right, and you're building out your strategy over the next 2 to 3 weeks as you're taking 20 trades, then we can think about fast forwarding. But for now, my recommendation is focus on SPY, monthly, weekly, daily, hourly. That's it. Don't go any lower.
Okay.
Journal every trade, mark up your charts and take a snapshot and put it in your journal.
Got it.
Just 2 minutes every hour during market hours. The only time you should be looking at charts outside market hours is to analyze your journal.
That's true.
And to see if the structure is different on the monthly, weekly, daily. So you should not be spending a lot of time outside of just learning.
That makes sense.
And then when it comes to strategy, if you start to mix strategies, you don't know which one works.
That's true.
So just stick to one strategy until you become really good at it. Money is not going to go anywhere. The market is not going anywhere. If you miss making trades the next 3 months because you're learning, that's okay, because you're protecting your assets.
Right.
Because the market is not going anywhere. So stick to price action. Price pulls back, gives you a break of structure, you enter long. It pulls back, break of structure, you enter long. It pulls back, break of structure to the downside, you enter short. So just continue this process for the next 20 trades only by looking at SPY.
Now here's my other question. With the hourly, because that's the swing trade, meaning you stay in overnight. Let's say I'm doing the swings on the hourly, right?
Yeah.
And it hits profit target. Do I just exit that position even though it was in that same day, or should I let it ride?
So in the example that I gave you, looking at the hourly, we will go back to that. When you get your break of structure and you entered here, right? This is where we entered because we broke structure, we entered here. And on the same day, price came to an area of value and failed to penetrate through that. So at the close of this bar right here, you exit your trade. It's the same day.
Mm-hmm.
It's the same day because here, I will do this.
Okay, so we're able to identify the, okay.
Yeah.
At first I was confused.
Yeah.
But, okay, so you broke structure and you noted it on your chart where the structure will be breaking it. So.
Yes. So you took a position right here.
Mm-hmm.
And you have another area of value up here. Price 2 hours, right? You come here at 1:30 your time, and you see price fail to go there. You come here an hour later at 2:30. You see, oh, price not only did it fail, it also failed to make a new high from the previous bar, and it is closing down here. So you close your position.
Now that was good.
Yeah.
You see that the price is struggling. It's not making any new higher.
Yeah. It's not exactly. It's not pushing. If it's just touching and holding, fine. But it's not even getting there, and it's struggling to get through. Then you close your position, and you've made a significant profit because you've entered 413 area, and you're exiting at 416. $3 later. That's a significant move. So that's how you should look at it.
Mm-hmm.
Now, sometimes it will give you an opportunity to just keep holding because there's no resistance, right? It just keeps going and you hold those positions. So it doesn't matter when you exit. If you hit your target, exit.
Got it.
If you have multiple contracts, this is where we talk about, can you let one ride? But, let's just focus on initially. Let's not focus on how much money you're making. Just focus on, do I get the strategy right? Am I entering and exiting at the right place? Let's just focus on that.
That is true.
Yeah.
I agree with you.
Yeah.
Okay, perfect. So I'll get this training sent back to me. Yeah, I think once I actually get the areas down, that especially that break of structure ordeal, to give me some confirmation that we're going in the right direction or we're going in this direction, either direction, understanding which direction price action is going in. I think that will help as well. Also, I was using the I know you said, so I was using the 20 simple moving average and the 200 because I understood, like, on a 15-minute chart, if the 20 is up, then we're in the long term. So if the 200 crosses the 20, that means we're to the downside. But if the 20 is above the 200, that shows that we're in a momentum of going upward. So I was using that as an indicator, which wasn't as effective. But I was using it on a 15-minute chart.
Yeah, the problem with moving averages, they are lagging averages. They tell you things after the fact. And when it's after the fact, for me, it's just too late of an information. It's just too late. And I'm just drawing it out here just for you to see. When the 50 breaks the 200,
Mm-hmm.
it's too late, because look, the price has gone down all the way down here, but by the time the 50 broke the 200, that move is done.
That is
Yeah,
true.
that's why I don't like using them. I just look, price went up, break of structure, right? We broke these lows, that's break of structure. We came up and it didn't even close above those lows that we broke, and price wham went down. 414 to 405 to 404.
And this is on a weekly or hourly?
This is hourly.
Okay.
Yeah. So by the time the moving average tells you what has happened, it's too late. On the upside, by the time it crosses your entry, you've already missed your entry.
Yeah, I understand.
By the time it crosses here, it has already done, right? The move has gone from here to here, done. So that's why I don't like to use moving averages.
Duly noted. Thank you for that.
Yeah. So anyway, I have to run now. If you have any questions, just keep asking questions. I'm going to put this on YouTube so it's easier to consume and we don't have to worry about access.
Okay, perfect.
And then I'll send you the link once it's up there.
Perfect.
And just keep listening to it and do your homework. Do your 20 trades. Journal your 20 trades. Take a snapshot of why you took those trades. Snapshot of your charts. And then we will do another session and analyze your trades.
Okay, perfect. Sounds good.
All right.
All right, thank you so much. I totally appreciate it.
You're welcome. Have a great weekend, and it's going to be a long weekend, so take care.
Okay, you too. God bless you.
Yeah, God bless you too. Bye.